Hello everyone, and welcome back to the Gold TLDR. What if I told you that the cash in your pocket right now, or the US dollars sitting in your bank account, has lost over 99% of its real purchasing power since 1971 when measured against gold? Would you believe me? Don't click away just yet, this isn't fear-mongering. Let's rewind to 1971, a pivotal turning point. With the stroke of a pen, President Nixon announced the breakup of the U.S. dollar and gold, effectively decoupling them. Back then, swapping your cash for an ounce of gold would only set you back about $42. But fast forward 50 plus years to today, in 2026, and the price of gold has smashed through the $4,500 barrier. Let's do the math. If you took that same $42 from back then and time traveled to the present, you couldn't even buy 1% of the gold you could have owned back then. What does this mean? It means that if we use gold as the yardstick real money, the value of the fiat currency we hold has essentially evaporated over the last 50 years. This is the hidden inflation tax that you and I pay every single day without even realizing it. Today, I'm not just going to talk finance. I want to share 10 fascinating facts about gold from the perspectives of physics, history, and even the origin of the universe. Watch this to the end, and I guarantee it will completely flip your perspective on what gold really is. At this point, the rational viewers among you are probably itching to object. Hey, wait a minute, your math is misleading. If I had put that money into TSMC or the S&P 500 back then, I'd be financially free by now. Gold has totally underperformed the market. I have to admit, that is a spot-on critique. If you took $200 in 1971 and put half into the S&P 500 and half into gold, here's what those piles of cash would look like in 2026. The stock portion would be worth about $32,000, the gold portion about $12,500. You're right. Over a super long cycle, because gold doesn't generate yield, its total return really can't keep pace with the world's top tier companies. But folks, you're only looking at half the picture. Let's look back at what happened around the 2008 financial crisis. The S&P 500 portfolio dropped nearly 10%, giving investors a serious cold sweat scare. But in that same period, gold shot up from $2,200 all the way to $3,800. What does this tell us? Stocks and gold are tools with completely different functions. Stocks are offensive assets. They create wealth during times of growth. Gold is a defensive asset. It saves you when the system falters and the world falls into chaos. To put it simply, gold is fire insurance for the entire financial system. Comparing its ROI to stocks is a logical fallacy. You're missing the entire point of why it exists. If you think gold is just an antique relic, you might be missing a massive shift in the tide. The entity buying gold the most aggressively right now isn't the retail investor on Wall Street, it's the world's biggest dealers, central banks. According to the World Gold Council's latest 2025 report, global central banks hold over 35,000 tons of gold. Furthermore, 95% of them believe gold reserves will continue to rise in the coming year, and 43% plan to increase positions within 12 months. As for those planning to sell, 0%. Why are the smartest financial minds in the world collectively bullish on gold? The answer boils down to one phrase: de-dollarization. When the Russia-Ukraine war broke out in 2022, billions in Russian foreign exchange reserves were instantly frozen by the West. This move sent shockwaves through every nation that wasn't a die-hard U.S. ally. They suddenly realized, the dollars I have sitting in the U.S. aren't actually my assets. They are a conditional IOU from America. At that moment, central banks everywhere asked the same question: what can I hold that is truly mine, carries no political risk, and can't be taken away? For 5,000 years, the answer has remained the same: gold. Countries like China, Poland, Turkey, and India aren't buying gold lately to speculate. They are doing it for sovereign independence. When the dollar is no longer perceived as safe, what do you swap those reserves into? There is no alternative but gold. We know gold is rare, but just how rare is it? If you melted down every single ounce of gold ever mined in human history into a cube, The sides would only measure 22.3 meters long. That's about 4 stories high. That is all the gold in the world. Even more shocking, according to the U.S. Geological Survey, all the known and mineable reserves left underground would only make another 15-meter cube. In other words, we have almost depleted the Earth's natural inventory. Why is there so little? Here's a mind-blowing fact. Gold isn't native to Earth. That gold ring on your finger is actually an alien traveler. Our sun's internal nuclear fusion can only create elements up to iron. To create an element as heavy as gold, you need the most violent, extreme event in the universe, a neutron star collision. Imagine 2 stars, heavier than the sun, but compressed to the size of a city, smashing into each other at 1/3 the speed of light. That instant release of massive energy is what forged gold. This gold hitched a ride on meteors billions of years ago to land on Earth's surface. This explains why gold is nature's money. First, it's a noble metal. It's chemically distinct and stable. Bury it for 3,000 years, dig it up, wipe it off, and it still shines. Second, its ductility is unmatched. 1 ounce can be beaten into a 300 square foot sheet, meaning it's easily divisible and standardized. People didn't invent the value of gold. We discovered it. Physics and the origins of the universe determine that it is this planet's perfect carrier of value. Now that we understand the cosmic scarcity of supply, let's look at demand. Historically, jewelry was the primary use. But data from Q3 2025 shows a major shift. Jewelry demand tanked by 23%, while investment demand soared 47%, and central bank reserves jumped 28%. This is a massive signal we call demand divergence. When the economy is struggling, people don't buy gold chains. Discretionary consumption drops. But because the economy is shaky, inflation is high, and the world is chaotic, the wealthy and central banks are pouring panic capital into gold. Safe haven demand rises. Gold's financial attributes have totally eclipsed its commodity attributes. Why do investors run to gold when they panic? There's a powerful law behind this called the Lindy effect. Simply put, for non-perishable things like ideas or technologies, the longer they have existed, the longer they are likely to persist in the future. Gold has survived as a store of value for 5,000 years. The Lindy effect suggests it'll likely last another 5,000. Contrast that with our fiat currency system, an experiment unbacked by physical assets that only started in 1971. It's barely over 50 years old. In a chaotic world, which side are you betting your life savings on? Speaking of scarcity and fighting fiat, my crypto friends are probably getting impatient. It's 2026. Why aren't you talking about Bitcoin? Fair point. If gold is the king of physical scarcity, Bitcoin is the lord of digital scarcity. Look at the last decade, 2015 to 2025. Gold went from $1,060 to $4,500, a respectable 4x return. But Bitcoin went from $314 to $100,000. That's a 300x increase. Gold's returns can't even see Bitcoin's taillights in the dark. Does this mean gold is dead and Bitcoin takes the throne? I think that's premature. They aren't in a replacement relationship, they are allies. Their common enemy is the fiat system that has depreciated 99% over 50 years. Someone made a great analogy. Investing in Bitcoin requires nerves of steel to stomach the heart-stopping volatility. But investing in gold gives you peace and certainty. Gold is the solution to entropy in the physical world, relying on physics. Bitcoin is the solution to entropy in the digital world, relying on math and code. Future asset allocation isn't about choosing one. It's about saying, I want both. Let's wrap this up. From fiat depreciation to cosmic origins, everything points to the ultimate law of physics, the law of entropy. Everything moves from order to chaos. The post-1971 fiat system is designed to steadily depreciate an irreversible process of monetary entropy. So, if you just leave your money sitting in fiat, your wealth is destined to melt away like an ice cube, just like that 99% figure we calculated at the start. Gold is the most powerful anti-entropy tool human civilization has found. It uses physical properties to resist the decay of time, cosmic scarcity to resist central bank printing presses, and thousands of years of consensus to resist social change. Gold won't make you rich overnight. It doesn't pay interest. But it's like a buoy in the ocean, providing a constant value anchor, spanning 5,000 years amidst the chaotic waves of fiat currency. And that is why, in the uncertainty of 2026, you need gold more than ever. This has been the Gold Too Long Didn't Read. If you like today's content, don't forget to like, subscribe, and share. See you next time.